What is going on, guys? Good evening. It's your favorite mortgage lender, Del Kawatmi, Got Mortgages. Happy Monday. I hope everybody had a blessed weekend. We finally got a big win the other day with the Giants. Thank God. We almost blew the game, but we were able to come through. We got a lot to cover. We all know last week the Federal Reserve went ahead and cut their federal funds rate. We're going to go over all what that basically means. How has that impacted mortgage rates and what's going to be the expectations as we start gearing into what's supposed to be a very, very busy fall winter time. Okay. So kind of looking at interest rates, this is going back about a little over a month ago, seeing that consistent downward trend with interest rates. We've seen a little bit of a jump really around the time when the Fed decided to cut. And we're going to dive deep in that into the second segment, talking about why is it that interest rates are slightly ticking up after the Fed announcement. Now, obviously, no one can argue, right? Since we have been consistently on that downward trend, right? So much opportunity for clients to qualify, so much opportunity for a lot of stuff to put things in perspective. Malik Neighbors was definitely a great pickup. I certainly agree with that, Jib. But we're seeing a little bit of a downward trend consistently. More inventory start to come on the market. A lot of different opportunities for many consumers to start taking advantage of refinancing. We have been consistently busy on that standpoint. And then we're also seeing a lot of opportunities for clients to qualify. I just locked a client at a 5.25, and he was very, very monthly payment conscious, really trying to stay under 4,000. There was absolutely no way we could do it if we had this same conversation less than a month ago, where his rate would have been closer to the mid to high sixes. We're now able to get him that lower and truly give him the ability to really qualify and keep that payment in perspective. Okay. So going to dive in really quickly again, going over what was a little recap last week. Again, you guys all know every single week this is being posted on our website, on our blog section, gotmortgages.com. Every market update that we have conducted throughout this year and even from before that. You're going to kind of see, again, the Fed, we all know, cut 50 basis points. We're going to dive into that. I mean, you have to be living in a rock to not know that happened. Existing home sales saw a little bit of a dip, which sometimes usually generally happens around this time. Builder confidence rises. This is the part that I'm really excited for. Starting to see builder confidence start to increase. What does that mean? That is going to mean more inventory, more new constructions. New housing permits are also starting to be uptick, which means that new opportunities for us to be able to go and purchase new construction. Surprise gain for retail sales, we're going to cover that, and then continuing jobless claims, once again, kind of really diminished, okay? So going over a little bit of the cut, we're not going to dive in too much of that because I feel like it's been saturated, but we all know now, Fed cut last week, it has dropped to that 4.75 to 5%. Again, it was not unanimous. It's pretty crazy. A lot of them sometimes wanted actually just a 25 basis point cut. I'm necessarily also in agreement. I do think that this little cut was a little bit aggressive at first. We took a little bit of time to do so, but we got that. We know that the federal funds rate, again, is not the same as the overnight borrowing rates. We've heard that. I'm not going to sound like a broken record, but the main two factors we know is inflation and employment, the two main things that I want us to truly stay on top of. Again, the bottom line, again, the Fed wants to maintain us from avoiding this recession or truly entering that soft landing, okay? They mentioned we're going to see another 50 basis point cut towards the end of the year, and then also potentially see another additional cut. So next year, we'll kind of see how the market reacts to that. Existing home sales, again, took a little bit of a very slight dip, right? Dropped just 2.5% month over month, 4.2% year over year. This is the part that I really like to see. Inventory start to tick up, which is generally very, very, really a little unusual at towards the end of the summer, right? You could see last year inventory was at 1.1. We're now kind of creeping back up, which is great. Starting to see a little bit more inventory, a little bit more homes staying on the market. This is on the national level. I'll be honest, in Jersey, we're still competing with multiple different offers on the market, truly showing a lot of that different stuff, kind of seeing where's the market, especially in New Jersey, and how that's starting to impact really how prices are being priced. Now, again, existing number of sales decline, but I want us to keep in mind also inventory also took a little bit of an uptick too at 0.7% in July and 22% year over year, which is awesome. Home builder confidence, you kind of see a little bit of a downward trend. This is where we were sticking on the rates. We're now seeing an increase in regards to builder confidence starting to uptick truly, really showing that into the expectation, future sales expectation, boom, 53. That's where they start feeling confident. So again, if we see those expectations jump up, we're starting to see interest rates, as we know, start to drop dramatically, which is going to allow more opportunity for more inventory to start coming on the market. Okay. Now, we also saw this is the part that's great. Now, listen, you're always going to see a little bit of downtick on permit, but an uptick almost 5% month over month when we look at new permits. We also saw an uptick of almost 10% on starts and also almost 30% year over year on completions. That is huge. A lot more inventory should be upon us, truly. Again, permits, starts, and completions showing that really nice bounce that we want to look at. Okay. July obviously kind of really sucked, but now seeing that little bit of a switch is really, really great news, right? Retail sales again rose 0.1%, which is a little surprising again. We did have a few different aspects. It's pretty crazy. Amazon Prime Day, $14.2 billion in sales. That is wild. Listen, I'm I'm not gonna lie, I am 100% of a victim, I should say, or a user of Amazon. I pretty much buy everything and anything. We've got the Prime too, so I mean, like if I want something, I want it in the morning, it's literally on my doorstep by 2-3 o'clock. I mean, you cannot beat it. And obviously they're successful from that standpoint too. Overall sales figures again for August showed consumer spending still remaining resilient. I'm not gonna lie, I'm one of those culprits too. I'll continue in jobless claims. So this is the part actually that was another factor as to why interest rates kind of took a little bit of an uptick. We saw that initial jobless claims actually dropped, right, by 12,000. Again, it was actually the lowest it's been in a little bit, quite some time. So we gotta keep an eye on that. I know still quite a few people on our end, even personally, who are still collecting unemployment, right, and continuing to collect continuing jobless claims, showing that it declined slightly, 1.829 million. Okay. Now, what do we have going on this week? Really not too much aggressive market data changes, except potentially the PCE report, personal consumption expenditure. We're going to get updates tomorrow on the FHFA, Federal Housing Finance Agency. Also, appreciation data from Case-Shiller. Those are two driving forces. One measures cash transactions, one does not. We're also going to get updates on August's new and pending home sales for the prior month. We're going to also see initial jobless claims as we usually do. And then again, the Fed's favorite measure on the PCE report, personal consumption expenditure report. Okay. Now, this is an article our friends at MBS Highway shared talking about really the explanation on the Fed decision and how it impacts mortgage rates. And I'll try to go through quickly just for the sake of time. We know the Fed once again cut their interest rate 50 basis points last week. They're bringing it to the target of 4.755, which again was prior to that was the highest it's ever been. Now, remember, the Fed is not cutting mortgage rates. You're not cutting your rates by half a basis point. They're really cutting the overnight borrowing rates for bank, which is to an extent correlates with that, but it has a direct impact on short-term rates. Credit cards, car loans, personal loans, short-term treasuries, and indirect impact, like I had mentioned, on mortgage rates. Now, this 50 basis point, there's two yield curves I want us to keep in mind. There's a 10-year and a 2-year treasury curve. Okay, this yield curve, again, meaning it's steepening, it's going to get more positive. It was inverted for quite some time where it was literally like this. Short-term yields were actually higher than long-term yields, which is generally not usual, right? And Fed cut their rates, which now means short-term yields will fall faster, long-term yields will give and be a little steeper, okay? Now you'll start seeing ARMs start to come back, right? As so many times for the last 2 years, people would ask me about an ARM mortgage, and I would say absolutely not. I'm even before that, I'm not a fan. As far as mortgage rates go, again, it really depends on the perception, the environment, and really the two main factors, right? We talked about it, inflation and employment. Now, again, in the past, rate cuts were actually bad for mortgage rates because they were inflationary. People were obviously spending less on short-term loans, going to long-term loans. Businesses can actually borrow more cheaply and create economic activity. Now, in this particular factor, now we know that the Fed has been restricted for a very, very long time, right? It took almost 2 years. I believe it was 7 different pauses prior to their hikes, right, where they pause. They raised their federal funds rate, we know, 525 basis points, 5.3. So they cut last week. Core PCE report, again, went to 2.6%. They could cut a lot more to be restricted. Now, again, the Fed said they would not cut until they felt inflation was under control, which really they did. I mean, it was almost at 9%. They got it to close to that 2% go over. Again, 30-year loan, long duration, again, on the 10-year treasury. If inflation's on the rise, your return is obviously diminished. Things cost more. Your return stays the same. Okay. We know, again, last week, like we said, Fed cutting signals that they felt inflation is under control. After all, hiking it is what it took, right, to bring it under control. And they said they would not cut until they felt confident again. We all know, again, a lot of their factors are signaling another 50 basis point cut this year and a 100 basis point cut next year, which really means economic conditions are expected to get looser, which is great for many consumers who are looking to buy or refi. It's possible, again, during this rate cycle, the first cut is the deepest. They'll likely go 25 basis points again in November and potentially again in December, unless the unemployment rate rises past 4.5%. Their SEP again shows 19 Fed members don't see unemployment rate rising that fast this year. So a rise again would likely be unwarranted. I do believe again that interest rates are going to continue to go down personally, probably not in that narrow straight line, but they are going to continuously start heading down. If you guys do want a copy of some of these slides that were created by our friends, please feel free to let me know. And that's about it. So again, a lot of different aspects that we have going on. It's great to see a lot of different activity. It's good to see a lot of our colleagues. We have been ridiculously busy. I'm already running late. Normally, I'm 2 hours shooting this before 6 o'clock. It's in my calendar. Kids are back in school, so we've got drop offs and pickups and a lot of different swimming and wrestling and stuff like that. But it's great to see a lot of the busyness with our colleagues. We've always been cranking away, thank God, with our team. I appreciate you guys jumping on. Again, I will share this onto our YouTube channel and on our website. As always, you guys can visit it, gotmortgages.com, and I'll catch you guys next week. Have a great day.